Thanks for coming here this morning. It's a pleasure to be in Devil's Lake. I'm Andy Murnock, auctioneer and equipment manager for Piper's Auction Realty and Land Management. Joining us here today, at least with Piper's, is Jim Savvy. He's my partner out of Bowman, North Dakota. That's where we came from here yesterday. And then Christian Miller works out of our Fargo-Moorhead office and is equipment division manager as well. So if you guys have any questions, feel free to grab any one of us. Stop us during the slideshow presentation at any point, or we'll keep this as informal as possible. You guys have any questions about anything specifically? Does everybody hail out of the northeast region of the state? We start talking about the land values, we can kind of focus on trends across the region, but we've got some specific slides. Is anybody from outside of the northeast quadrant here? North central, okay. Perfect. Morning, Ryan. Give you kind of a brief history on Piper's and what we do. We operate throughout the upper Midwest region of the United States. The majority of our business conducted here in North Dakota, South Dakota, and Minnesota. We do have offices in Wisconsin. We do some land management down in Missouri. We have a regional auction facilities that you've seen probably on interstate outside of Steele, North Dakota. We also have one in Bowman, and then one outside of Sioux Falls, South Dakota at the Worthing exit just south on I-94 or I-29. That region starts getting us into the Nebraska and Iowa side as well. So for real estate, we are licensed in all of these states plus Iowa as well. For quite some time, everybody's always referring back to how are today's land prices back to historical? What are the swings in the economy? What are we looking for as far as future forecasts? And of course, how does it relate to 1980s, right? We've got some interest rates now, and for those of us, and I'll put it in my age group of 40 years old and younger, we've never paid interest to borrow money. I mean, if we had a loan out there, it was basically interest free. We didn't have any expense that we're calculating on low interest borrowing notes. Does anybody else have the same philosophy, or can you remember actually paying interest at some point in your career? What was the highest?
I paid 9.5.
9.5?
18.
18%. You had a loan at 18%. Okay, I never have. And I hope we never do. If we're referring back to kind of what we're seeing, and obviously this is last year's slide. It wasn't updated for this year, but the next slide will give the more current one. But the reason I continue to use this, I don't know if this pointer works, but you can see what happened basically from the massive run up from 1974 to 1978, started to level out right there between 80 and 82. What happens? Interest rate goes up. We see the biggest real estate crash in U.S. history, correct? Basically took 21 years from the time it left in 1982 or 83. It took 21 years to rebound to get back to that same current value, that same land value price. So the big question is, are we heading that same direction? The answer probably unlikely, okay? And the main reason we don't have 18% interest. When we get into some of the next slides, I'll kind of touch on that here a little bit too. But over the course of the last 15 years, we've been watching the land prices pretty steady. Can you hear? Yeah, feel free to let me know if you can hear. We've been watching the land prices pretty steady here on the national scale. We see the farmland values basically from 2010, average at 2150, climbing pretty steadily over the course of the last 14, 15 years. Right now, sitting at 4170. So from 2150, 4170, doubled in 15 years. And that's on the national average, national scale. For the looks across the region broke down by state, or across the nation broke down by states, the 2024 farmland values, and this is just on cropland. In 2024, North Dakota reported 5.6% increase in value. So what was being expected from 2022, 23, 24 was that we were going to start seeing that land market level out a little bit, that we weren't going to see any more 2018 to 2021, massive run-ups in value. But it didn't level out as anticipated, and there's a few reasons why that we'll kind of touch on here in a little bit. But the overall scale of the land market has continued to have a steady to positive trend, and regardless of any debate that was happening probably 18 months ago when interest was going from 3.5% to 6% and 6.5%, and then in certain instances or certain loan rates, we were starting to see out there even higher into the 7 and 8% for certain situations. And it, for the grand scheme of things, it really hasn't had a negative impact on direct farming. So this is the cropland values. North Dakota is reporting at 2,600. That's up 6.1%. And then pasture land value, probably the strongest market that we're seeing throughout the upper Midwest. Of course, the livestock industry, starting to see the cattle guys starting to get their share of it. The markets right now currently is as strong as we've ever asked them to be. And so for those of us who are in the cattle business, it's kind of fun. But if you're in the cattle business, you also understand that it takes 10 years to see 1 or 2 good years. And when you do, it's probably time to, rein it in a little bit or figure out how you're going to survive the next 10 years, because profitability is not every year, consistent. So a little more cautious, I believe, from the livestock guys than there is when corn hits $9. So this is how we break down the state. So the reason I was asking where you guys are from, if we're gonna talk about Region 1A, which is the north 3 counties of Region 1, and then Region 2, and then who said they're from North Central North Dakota? Or are you Rolette, Pierce? Okay, yes, we'll touch on Region 3 here as well. We'll touch on them all, but I just want to make sure we stopped. If anybody has any questions. So Region 1A, we've got Pembina County, Walsh County, Grand Forks County. Over the past 9 years now, we've had 93 transactions just in those 3 counties, seeing a steady trend line up. And you can see that what we were talking about here about 10 years ago, that market was ranging in that $2,200-$2,300 an acre range, and has climbed all the way up to what we saw at $6,700 this year. Per tillable acre, obviously was substantially higher. A lot of $8,000 to $10,000 per tillable acre in these 3 counties. The one that everybody was talking about last year when we were given this presentation was, of course, this one that happened almost 12 months ago. So 17,500 for a half section of ground in just outside of St. Thomas. So pretty hot area, really productive land. And obviously, a few of us were talking here before the seminar, you get the right 2 guys involved in the right production, the right scenario, land market can it can move quite a bit or pretty substantially in one individual sale. But does that shift the value of every tract of land? And the answer is no. The very next day, another tract of land that was sold in the same area, right at $15,000. So a $2,000 per acre difference in about a mile and a half in 24 hours. So Region 1B is the south region, same trend line. Over the last 9 years, we've been seeing $2,900 an acre, all the way up to what averaged this year at $5,500. But what was noticeable, at least for pipers, was in 2022 and 2023, the amount of sales, the amount of acres that were sold in these 3 counties versus any of the previous years in history. So from 2016 to 2021, we only sold about 15 total auctions in those 3 counties. In the last 3 years, we've done almost 80. So there's been a lot of land transactions happening in those 3 counties, and primarily because we're starting to see a really large run up in value as compared to what they were in 2020 in prior years. For Region 2, which is the region we'll touch on here, a lot of land transactions happen. Of course, there's a lot more counties involved here, 244 sales, 42,000 acres have sold in the last 9 years. And this is strictly with pipers. We don't incorporate any other company data. I'm sorry, I didn't see you guys behind me step in. But we've got a lot of data strictly from pipers. Trend line is moving steady to up, but in the whole grand scheme of things, the average value isn't swinging as much as what you see in the Red River Valley, where you're starting to get into $8,000, $10,000, $12,000 an acre ground. Although there is certain areas in certain ones of these counties that can start getting awfully close to 10. So marking the high, I believe, is 84.50 and that was a year and a half ago here as well. So pretty steady market, but steady to positive gains basically throughout all of North Dakota. Just some are at a little more rapid rate or a rapid pace. Region 3, northwest, north central, 419 transactions, almost 80,000 acres. Again, same time frame, 9 years, and really a widespread value from top to bottom. So there's I would say probably the largest gain in value, in my opinion, and Jim can probably argue with me here a little bit, but in Divide County, and northern Mackenzie County is probably where we saw one of the more rapid gains of value in the last 12 months. And we sold a lot of land in that part of the world for $2,200, $2,400, $2,500 an acre. We had a couple of sales there this year back to back with land values exceeding 4,000. So almost doubling in 2 to 3 years, and consistently seeing those values across the board, even with other avenues of sales. So there's a couple of attorneys that have some sales up there that exceeded 4,000 an acre as well. So that very northwestern quadrant of North Dakota is seeing a lot of strong impact and a lot of impact on land values. And we're starting to see a lot less cropland in that part of the world and selling for sub 2,500. Region 4, this is more my home area. Jim and I hail out of Bowman, so we've conducted a lot of these sales, I guess, over 400 sales now in the southwest corner of the state of North Dakota. Pretty steady market. There's not as big of a swing in value of cropland, value of pasture land, not as big of a swing in quality of the productivity of the cropland and pasture land from Bowman County until you get all the way up to Oliver County. So a lot of strength. There's always been strength in the market here for the past, probably since 2012, 2014 in Dunn County, Billings, Golden Valley, where there's a lot of oil influence, oil impacted areas. There was a lot of strength in the market, obviously from excess capital that was had the ability to be invested in the western North Dakota for the past about 15 years now, 10, 15 years. So steady market there. As you can see, and these are not broke down by crop acre, by pasture land, anything like that, but we're basically from 2016 to 2018, we've seen about a 30% increase in value over that time, from about 1,300 all the way up to a little over 1,800. Cropland values in the extreme southwest portion of North Dakota, what would we top out at, Jim? 32, 3,300? I'd say between Bowman County, Slope County, Adams, and Hettinger, you'd probably see some really good, it'd have to be really good land in the right area to beat that 32, 3,300, 34, maybe 35. In Stark County and some extreme areas of Billings County, there's a lot of demand in that area. It's kind of one of those hotbed spots where not every neighbor necessarily gets along and everybody wants to expand. So there's always some certain unforeseen underlying circumstances when you comes to an auction sale that generates a lot of interest and a lot of power behind those numbers. You'll start seeing some land tickling the $4,000 per acre area, which there's only been just a very few in the last couple of years, but once in a great while, you'll see those dynamics turn. Region 5, probably been one of the most active regions in the last 3 or 4 years. You can see how many total transactions, basically since 2021, post-COVID, 50 to 60 per year. And then this last year in 2024, 84 land transactions happened in 2024 in these 8 or 9 counties. So a little over 73,000 acres, and average has been steadied up. A couple of years in between. And these are some small numbers, when you're only talking about 5 or 11 sales, not a really good grip on what an overall general average is, but we started getting into 50, 60, and 80 sales across the region to be, that'll get you really close as far as average dollar per deeded acre, not average dollar per crop acre or grassland, average dollar per deeded acre. So across the board, right at 4,100. But if you look over the past couple of years, almost a 20% increase just in those 5 counties alone. So for what we were anticipating, I guess when I gave these stats 5 or 6 years ago, or 7, even 3 years ago, 4 years ago, when everyone was out asking what your crystal ball is like, right? What's the land market going to do? And everybody kept saying, well, it's going to be steady. We don't think it's going to go down. It's going to be steady, probably not going to raise it, go any higher. And even with all the economic indicators showing why it should stop as far as increase in value, it just wasn't there. Natural inflation obviously happened after COVID, and those values are probably not going to come back down, within reason, or barring no major economic impact, and none of us want to see that. Still has been what we consider a red hot market. We've been saying this for probably the duration of my entire career. I have yet to go from year to year where the values haven't continually and steadily been stronger. There's certainly some years where the value jumps higher than others, but for the past 3 or 4 years, as we saw, 10, 15% average increase over the board. The state's recording 6%. But regardless of everything that's coming into the economy, we're still anticipating a red hot market moving into the spring of 2025. The reason is for the last 20 to 26 months, we've been talking 80% of all land transactions, the buyers are the active producers. It's not out-of-state guys. Somebody mentioned China earlier or international buyers. It's not the international buyers. It's not your investment buyers. It's your active producers. And the main reason is us as farmers, the active producers that are involved, we can actually generate a higher rate of return, generally speaking, than the investors are. Investment buyers looking at 2.5%, maybe 3.5% return on investment on a really good piece of farmland. On an average piece of farmland, the higher the value of the cropland or the better the productivity, actually the lower the return on the investment is. And so you're looking at, on really good cropland right now, probably 1.5%, maybe 2%. Stock market's been significantly better than that over the past 3 years, 4 years. That's where the money's actually being placed. Starting to see some of that money exit the stock market and go into a more secure holding in real estate. And that's where we still see the 20% of the land sales going to investment buyers. For the active producers, I know again for years everybody always kind of had that saying there's no new guys coming in, there's no young guys coming into the market. There actually is quite a few young guys entering the market. The next generation of producers is still our strongest buyer base when it comes to comes to land sales. A lot of the next generation, we're starting to see the baby boomers exit. Next generation is becoming the decision makers. And again, for the past 10 years, we have not had to borrow money or pay to borrow money. Borrowed money has been relatively inexpensive, relatively free. You could be aggressive and progressive in your operations, and we've certainly seen a lot of that. There's a lot of significant cash at closing, and that's what's still generating a lot of land interest and why the land values are still having the ability to maintain and continue to see values remain strong or even go up. And if we started seeing cash at closing go down a little bit, that's where the interest is going to start coming in and being a key factor. So as of right now, interest rates, only a certain percentage of the purchase itself is actually out on a loan or being borrowed against, and that's what's really maintaining the positive mentality going into this market. And of course, government programs. Government programs have been probably hands down one of the biggest impacts in the decision-making process, and we'll talk about that right here. So over the past 15 years, again, all the way back to 2010, we've seen government influence, government payments sitting on top. It's the blue line right here up on top, and impacting our U.S. farm scale. I think the next one breaks it down even better here. Okay, so in 2020, we all know what happens, right? Everything, all the years prior to, pretty steady. Net farm income was relatively steady for about 8 or 10 years. Certain demographics of the industry, sugar beets said, we're in high, high profitability. Potatoes are doing good. Your general North Dakota wheat and pulse crops and row crops kept everybody kind of in the market. But the most significant impact in 2020 was the fact that the government payments doubled the net farm income for 2020. Okay, government payments doubled. $49 billion in net farm income, $46 billion in government influence. In 2021, those payments continued to roll in. $26 billion, sitting on top of one of the most profitable years in history. And then 2022, same thing. Now they reduced the government aid in 2022, finally for the first time in the 4-year process. It went down to $16 billion. But you can see what the net farm income across the board in the nation was, and we're starting to see what the impact is and what drives the markets. And we all remember what 2021, 22, 23 was like, where the values continue to rise in just about every demographic across the scale. But we also had commodity prices that supported it. In 2024, we started to see that come off a little bit, and the net farm income remained relatively strong. This is a national scale across the board, but the $12 billion government influence was substantially less than what we'd seen 3 years prior at $46 billion. So Starting to see a little bit less government influence. We're not seeing that the market directly see that impact from day to day. Now, the projections for 2025 is going to maintain at the what they considered at the end of 2024 a little over 100 billion in net farm income with a $10 billion government payment program. But if we've been paying attention to the news here lately, there's an extra 10 billion that they're planning on putting into effect. So this has not been passed yet, but this is a dollar amount per acre that producers can see across the board and as a economic loss program payment. So has anybody heard about this? Everybody's kind of getting somebody, is anybody an expert in it? Because I'm not yet. No, just waiting for the mailbox to have a check in there, probably be there pretty soon. So it's going to be based off the 2024 production side of it, based on total acres produced, and they're going to consider the economic loss payment. I believe, was it cotton, Jim? Was it cotton? That's going to be the high receiver. Is anybody cotton farmers here? No? Okay. Yeah. We haven't tried to get down Southwest North Dakota either, but a little more arid climate, maybe we should. I think they're talking $70 or $80 an acre for cotton. So I think that's going to have a little bit of an impact here. This is what we're talking about with interest rates. But I think those government payments, we're going to start seeing the strength of that carry at least for the first 2 quarters of 2025. So I think if anybody's anticipating making any major purchases, the beginning of 2025 is where that confidence level is going to come from the active producer side. We follow the federal effective rate pretty close. I like to watch this. This is what it costs your bank to borrow money. And so this is kind of what I was talking about for those of us who are under the age of 40. Probably didn't start borrowing money until 2008. You can see it didn't cost us very much to borrow money in that time frame. But everybody says, what's the impact of today's interest rates on the markets, whether it's land or equipment? What's the overall impact? Well, as a general scale, where we are currently sitting, and I believe that's just under 5% on the federal effective rate, where we're currently sitting, there's only been 6 times in history where it's been less than that. So are we really in a nasty interest rate cycle right now? Not necessarily. It's higher than what we're used to. And for guys like me, it's almost devastating, right? Because we didn't borrow the 8%, we didn't borrow the 18%. But generally speaking, across history, since the 1950s, there's only been 6 or 7 time frames where interest has been lower than it currently is. So we're kind of in a manageable operational cycle. And I think that's what's keeping everybody steadily positive, positive thinking all the way through. So the investment buyers, the majority of the money that we've been seeing from investment buyers use their tax strategies, right? So it's 1031, 1033 investment money. A lot of 1033 in the past, 8 or 10 years, we hadn't really even heard of this tax code in North Dakota until we started seeing some eminent domain and some pipelines and easements that come through. So that's what 1033 is. If you have an easement or a eminent domain situation where you're starting to receive money. In Southwest North Dakota, there's some massive transmission lines that are going through. You've got to basically have a 5-year period to invest that money in utilizing a 1033 tax code. 1031, everybody's always familiar with that. If you want to sell some land, turn around and buy some land with the same funds, we can facilitate that process too. That also works if you're selling any income producing property. So if there's an investor out there who owns a bunch of apartment buildings, and we see this quite a bit. There's a lot of investors that own apartment buildings. If an apartment building sells, you can turn around and reinvest that into agricultural land. It's income producing property. Okay, it falls under the same cycle. It's all income producing property, and then that's where you start seeing these tax strategies come into play when they're starting to make agricultural investments. Why? An apartment building, if you've ever been a landlord, is a very active management process. To be a agricultural landlord, if you get a good tenant, it's a pretty passive investment. May not be the same returns. It's obviously not generating 18 or 20% return on investment. That's why those other ones are active, but it's still a lot safer to put your money right here into farmland, specifically in North Dakota. Generally, you're not seeing anybody from California or New York picking up Wall Street Journal and seeing a land auction. We get a lot of guys ask us, well, geez, I got a $2 million property for sale. Why aren't you advertising in the Wall Street Journal? There's nobody in New York picking up the Wall Street Journal wanting invest in North Dakota. If you're wanting to invest in any specific region of the US, if you're wanting to invest anywhere, generally you're gonna pick up the advertising from that local area because you're specifically looking for that region. Why? Generally, you own land there already. You either grew up there, you inherited property there, you had family there, you have friends or connections there, or there's personal relationships where you actually already have a tenant in place. If I want to come buy some land up here and I know that Ryan's a good farmer and I've known him for a lot of years, I can buy land and know right away that I have a tenant in place. Talk to him before I make the purchase and go from there. You see a lot of those relationships building as we work into these land sales. Again, back to what we were talking about for acceptable return on investment. If it's really good land, 1.5 to 3%. The lower the quality of the ground, the higher the return on investment is, but the lower the rate of return on appreciation is as well. So it kind of all balances it out over a 10-year cycle, but 3.5 to 5% for lower quality land and 1.5 to 3% return on investment for your better ground. In many instances, that is actually going, still going down. If you start selling some land up in by St. Thomas or Northeast North Dakota for 10 or 12 or 15 or 17,000 an acre, that 1.5 might be hard to get. Okay. Current selling trends that we've noticed, this is just strictly an observation from Lifers. Pre-COVID, we averaged about 100 land auctions a year. And we did that for about 10 years, 100 land auctions a year. Prior to that was about 45 or 50. Post-COVID, the last 4 years, basically, or 3.5 years, we've been doing 200 to 250 annual land auctions. So what's the main reason for that? Anybody have any idea? Retirees. Okay, retirees. You gotta have the opportunity to take the money now. Life is short. Money is easier to split than land. If I don't have a next generation that's actively farming, they would just soon take the cash, or they're going to sell the property anyway. There are some tax strategies and benefits that you can utilize to either buy or sell. But the generational transfer for estate planning is probably primarily number one reason. So now, all of a sudden, post-COVID, it was this big ramp up. It wasn't, we didn't go from 100 sales a year to 120 to 140 to 200. We went from 100 to 200. And the primary reasons, when inflation automatically hit, inflation drove land values, it drove the demand for sale because the demand for buying was there. So if they were on the fence, or somebody was on the fence as to whether or not we were going to retire in 2021 or retire in 2025, when the value started striking in 2021, all of a sudden it seemed a little more appealing to maybe go to Arizona earlier than normal. So there was a lot of opportunity for people to exit the market. The stronger land values is primarily where that was at. So we get a lot of question as to, now that the interest rates are going up and we're starting to see commodity prices are coming down, is there a lot of forced pressure on producers? Are we seeing bankers call us up and say, hey, can you get this guy out of a financial jam? There's very, very few. I'm not going to say none, but there are very, very few forced or encouraged sales with the lending institutions at this time. So if we see, commodity prices kind of drag for another couple of years, and you enter into another drought like we had in Southwest North Dakota this year, there's always that possibility. But for the last 10 years, it's been a very positive. The last 15 years or 18 years, it's been very positive to be involved in the land auction business, because the amount of forced sales have been very, 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 very few. So I think we'll see a few one-off quarters maybe in the next 3 to 5 years. We might see some operations want to liquidate a quarter or maybe 2 quarters of land, just to help the balance sheet a little bit. But for all in all, general purposes, the value of the land has gone up enough over the past 10 years, the past decade, that your equity on paper has certainly superseded any concerns that financial institutes have had. Who's got the crystal ball? What will happen in 2025, right? Always the big question. That's why everybody came here. That's why we got such a nice crowd here. Thank you all for coming. It's when there was 4 people, when we had 9:30, I was wondering what we were going to talk about. It's going to be a question and answer session. So I appreciate everybody being here. But what's the crystal ball? This is why everybody comes. What are we looking for in 2025? And as a general overall principle for the land market, we're just probably going to be right in the middle of the road again, what we've said the last 3 years. There are really no economic indicators to say that the land value should continue to rise, right? There's no reason behind it, other than the fact that we're gonna start seeing some more, government, influence here, probably the first couple of quarters of 25. I believe that's gonna, come off a little bit at the end of 25 and into 26, but you never know. We've got a new administration, there may be new policies put in place. Come January 21st, we might be a lot smarter. Come April 1st, we'll be a lot smarter. We'll be paying attention because we'll be in the field, but we'll be a lot smarter, right? Generally, the strength that we saw ending 2024 and at the end of 2024, both land and equipment markets, we felt were very strong. So we'll talk about the equipment side here in a little bit, but in the overall general scale, the markets were very strong and should continue that trend all the way into 2025, at least for the first 2 quarters. There's no reason to see any major changes in the first 2 quarters of 2025. Commodity markets, they will have to recover or that will change. Okay, so commodities are probably the biggest indicator that we're watching right now. We haven't had a massive disaster in the commodity markets. Livestock has certainly been keeping the markets up. Last week in Bowman, selling a lot of $2,200, $2,300, and $2,400 calves. So it's kind of fun. You've been in the cattle business for a long time, like some of us have been. It's kind of a fun time to be a part of it. So. Okay. Talking about the land individually, breaking down the land, pasture land, that's what we were talking about, a livestock deal. As far as the pasture land's been concerned, you're not gonna see pasture land generate the same rate of gain of what cropland does if corn hits $9, right? There's always that long-term active planning stage for a farm producer who has the ability to write that check for, or at least put the down payment plus down for a piece of property if their commodity markets go up. In the livestock business, you're generally, like last year was a very strong year. That healed up the previous 5-year downturn. Okay, so it took 1 year to heal up the previous 5. Now I think that this year, as strong as it is, and we're probably, in my opinion, in year 3 of year 5. I'm not an economic professor by any means, but I think we've still got a couple more years of really strong livestock values, barring no media trend where they put a dairy cow on TV. So if we have this strong market trend, now you're going to start seeing a little bit more aggressive and more active buyers on the pasture land side. And a couple of guys were talking about that here earlier this morning as well. But the active lookers for cash lease on pasture land is probably where the strength of the market is. There's been a lot of grass seeing a 15 or 20% increase in cash rent. Cropland, we all have a pretty good grip on this. I guess what we've been talking about here, the high demand is really for high production soils. Again, it's your active producers looking for good quality land within a reasonable distance of home. Reasonable distance from home used to be 2 or 3 miles. Now it's 30, maybe 35, 40 miles from home. Guys aren't afraid of traveling a tractor that can go 35 miles an hour for an hour to get where they're going. So the heavier, more saturated soils, the ability to hold water specifically in this part of the region, if it's not drained appropriately, you'll start seeing lower demand for that. But in the whole general scheme of things, we're going to see a lot of trending upward for cropland. Recreational land. This has always been a big question on the end. A lot of, especially get up into this area, a little more wooded for deer and elk or moose, whatever the case may be. A lot of good demand for wooded areas. There's good demand for wooded areas in Bowman County too. We just don't have it. So if we can find some, we'll certainly take it. But the elk hunting is a predominant factor, a key factor in our part of the world too. If you can have a landowner tag to go with it, basically name your price on the ground, because there's plenty of guys out of Bismarck or Fargo that'll come and shoot it out once or twice in every other year maybe. So upland bird hunting against a big part of southwest North Dakota or western North Dakota in general. There's good demand for it, but it's not driving the market. Okay? Hunting land is not driving the market. There's investors that will put an added value bonus on what they believe that they can get a return on investment with, and couple that with recreational hunting ground. But for the most part, you're not going to see anybody come in and spend $2,000 or $2,500 an acre to shoot a bird once or twice. Now, there are some dedicated areas that are, generally land to be worth $1,000 or $1,200. There might be some good hunting prospects to bring in. $1,400, $1,500 ground, maybe south of Carson, North Dakota, or in that part of the region of Grant County and all the way down into Corson County, South Dakota, where good CRP ground can generate you a little bit of return on your investment. Plus, you get to take your buddies hunting on the weekends, and you're not very far from Bismarck to go drink a beer at night. So, waterfowl hunting, pretty low dimension. There's plenty of places to shoot waterfowl, but it's not driving any extra value from them. We take a lot of pride in the way that we offer our properties and how we sell them. And I know there's getting to be a really strong push, and you guys are all seeing in this part of the world too, but there's a big, strong push for online only sales. Pipers is going to continue selling with live sales with online simulcast. And the main reason is we want to be able to work one-on-one with our customers. We want to be able to work one-on-one with our bidders, make sure their representations are good. The one thing that we have to be careful about for the online only sales, and there are certainly good situations where the online only auctions work, even within our system. But we want to have the ability to make last minute representations and make sure that there's full transparency in the auction business, land and equipment. It's certainly a lot easier for auction companies to sit at their computer wearing sweatpants and taking your money, but we want to make sure that we're going to be in front of everybody and giving that opportunity to make sure that if you have last minute questions that you're not asking the computer, that you can actually get somebody to answer the phone. So that's the way we're going to continue to do business for the next foreseeable future, regardless of the massive trend to go towards the online only sales. So selling the Piper's Way, 85% of our sales now are still conducted at a live auction, allowing bidders to join in either by phone or with internet bidding. So has anybody participated in one of our sales in the last, ever? Land or equipment? Equipment? I got shaking hands. Yep. Not everybody at once. It's okay. Just like church, because no one sits in the front row either. So, I won't dabble on this too long. There's a lot of we're not tax guys, we're not tax professionals, but obviously we handle a lot of different situations for different clients. Everybody's in their own personal situation. They've got their own goal set in mind. Everybody does something different as far as how they're going to handle their money once they make a transaction, once they make a sale. So everybody has their own individual scenario. We'd like to break that down for you, at least give you some options. We are not the ones that are, we don't get paid to do that. We're not, it doesn't cost more. We've just been through so many scenarios. There's a certain amount of expertise that we can potentially offer. I just brought this up just so you can see what the 2025 changes are going to be as far as the long-term capital gains. For some people who are wanting to sell land, obviously the biggest tax influence on land is what's going to happen with the capital gains. How do we handle that? There's multiple ways to do it. Number one is what we talked about, 1031 opportunities. Generally speaking, if you're in the retirement setting and you're wanting to sell cropland, which is a low activity investment, it's more of a passive investment anymore. You don't have to actively manage it every day and worry about, kicking somebody out if they haven't paid their rent. At least only once a year, you have to worry about that instead of once a month. Generally, if you're selling that, you're not going to go back into a 1031, right? You're not going to go buy another active piece of cropland. There are some other opportunities. We do a lot of UPREIT transactions, 1031 UPREITs, 721. And that basically allows you to buy into a mutual fund or portfolio of either land holdings or other investment property opportunities. Those are tax deferred as well. Next generation can get a stepped up basis and an annual dividend on those type of investments. There's a lot of those opportunities that we talked about individually with everybody. I won't get into a lot of those, but some of the biggest changes, I guess, the basis of each stair step this year just went up to its generic 2.5% or whatever they call it. And for 2024 to 2025, did the same thing. These stair steps, those were predetermined for what's going to happen with the gift tax and the annual estate tax exclusion. So the big fear was when Trump left office last time that they were going to revert back the estate tax back to 5 or 6 million per individual, whereas we were at 11 or 12 million when he left, because he basically doubled the estate tax. When it got to the point where we're at 10, 12, 14 million dollars per individual, almost 28 million for a couple right now. That pretty much takes care of the majority operations, at least agricultural operations in North Dakota. Not all of them. There are some of you guys that are doing extremely well, but for the whole general purpose, or 90% of the clientele, that tax burden pretty much takes care of a lot of the estate tax filing for everybody. And now that we're probably entering back into another Trump administration, there's a lot less chatter about this sunsetting back to what was originally 6.5 million, probably be at 8. So instead of being 14 per individual, it'd be 16 total. Guys have any questions on 1031 tax exchanges? I won't bore everybody with that speech. I can put my tax hat on afterwards. If you guys have any questions or are going through that or need to potentially look at some opportunity to go through it, I'll certainly work with you. The main thing on the 1031 is that you want to be properly planned ahead of time. You have to disclose the right or the fact that you're going to utilize this tax code for any purpose, whether you're a buyer or a seller. If you're going to buy land and utilize funds from a previous sale, you have to disclose that on your purchase agreements. We can work you through that entire scenario. If you were in that scenario as we speak or getting ready to, just grab me at the end. I'll certainly give you some options and maybe some paperwork to take home and consider. So that's pretty much the end of our land sales, land values. Anybody have any questions on that before we get into a little bit of land management? Then I want to talk about equipment. So I think we're kind of on pace. I got about 15 minutes left. Okay, Piper's Land Management, one of the biggest growing segments of our company. We now manage about 250,000 acres across the upper Midwest of the United States. And these are all the clients, basically. So we've got individual landowners, investors, trust companies, investment firms. A lot of universities and colleges get land donated to them. There's different political subdivisions that we work with. Number one would be the Fargo Diversion. We manage all the property for the Fargo Diversion and different entities like that. It's becoming a large portion of our workload and specifically for our land management department. A lot of the things that we look at as far as when we're managing property is what kind of value we can add to the property, and as well as how well we can work with the current tenants. One of the biggest stresses of a landlord's, annual life is how do I have that conversation with a tenant that I've been working with for 20 or 25 years and still try to maintain a good working relationship, but still maximize and capitalize on my asset the best of my ability. And that's why they'll work with us. On the western side of the state, we see a lot of energy. There's a lot of wind towers that are starting to go up. There's obviously a lot of pipelines. There's a lot of legal aspects that go with that. But we work hand in hand with everybody for that as well. So, okay, on to the equipment side. Jim and Christian and I are all part of the equipment division here with Pipers. We've been pretty much controlling the equipment market for our company for quite a few years now. Really one of the big benefits that Pipers, what we do, we offer our mutual sites. We've got our auction facility, our regional auction headquarters in Bowman. We've got one in Steele, and again, like we talked about, there's one out in Sioux Falls. We are looking at an eastern sales site here as well, and potentially one up on the northern tier of North Dakota in the foreseeable future. But really trying to give everybody an opportunity to look at some other avenues if you want to sell 1 or 2 or 3 pieces of equipment. However, our primary focus is on retirement sales, estate sales, so on and so forth, but trying to really market the equipment to the best of our ability, utilizing as many aspects and avenues as possible. When Jim and I first started doing this, I won't say how many years ago because you guys won't believe me anyway, but when we first started doing this, the majority of the equipment that we were selling did not leave a 40 or 50 mile radius. When we had a farm sale, I remember Jim and I booked a farm sale locally in Bowman. There was a really good friend of mine that decided to retire, for a friend of ours, and the sale was a $300,000 sale. And that was a massive farm retirement sale. Everything with the exception of the 9400 John Deere tractor stayed within a 40 mile radius. That tractor was east of Bismarck and actually into Minnesota. But 20 years ago, the majority of that equipment was being sold up in a 40 mile radius. $300,000 of net equity to be picked up in a 40 mile radius is an accomplishable feat, right? Now we're selling $300,000, $400,000 individual pieces of equipment. And when you have a whole line of those, the last sale we did was a little over 6 million, and we scattered that equipment across 2 or 3 different countries and 25 different states, and there was only 95 items. So you have to utilize this massive global scale in order to achieve what we would consider fair market value and maintain your depreciation. It's our job, or it's our goals, to eliminate the cost of your equipment, or what it costs you to produce, what it costs you to operate that piece of equipment while you had it. So when we're trying to get our data, our information, and everything put to scale, it's with that in mind, that if we market it the best of our ability, if we can increase the value of that item for you as a seller, or work with as many different buyers as possible, then we can actually eliminate what it costs you to operate for the past 3 or 4 years while you utilize that individual item. And of course, there are some tax benefits and benefits to utilize if you're looking at a equipment sale too. I don't have that on the slideshow, but if you are looking at potentially retiring or wanting some tax strategies, because the difference between selling land versus equipment, land is gonna be on a capital gain scale, equipment is gonna be at net ordinary income, right? So you're gonna have to recover any depreciable losses or any depreciable expenses that you would put against your taxes for the previous few years. With the land auctions, we are still going to continue to drive the live auction with the simulcast online bidding. And the main reason for me and in our company, why we want to do this, it allows us to utilize multiple online sources, not just one. An online bidding auction, or an online only auction, you can only bid off of one platform because multiple platforms don't talk to each other. With a live auction, I can be utilizing different computer screens, different online platforms, and you'll see that here just alone in the statistics. For 2015, we basically started doing online simulcast auctions in 2009. We were one of the first companies to bring this into the land and equipment. There was a lot of cattle auctions that were doing it prior to that. You saw a lot of bull sales on DV Auction and Livestock Link and all these other entities. Our first simulcast auction was actually with DV Auction. So just because I was familiar with that through our bull sale, but we have now since integrated our own system. But in 2015 to 2019, we were pretty steady at 20 to 24% of the net value of an equipment auction going on the internet. And the total amount of bids between 15 and 25%, total amount of bids was through the internet as well, 20 to 25%. Now, 2020 hits, we had 19 auctions on the books for March and April of 2020. We got to do one live sale, and in a 24-hour period, it was the night before, which was going to be our biggest auction of our career. We had to convert 19 sales to online only sales overnight. And that was basically on the 1st of March, and the 17th of March that year. We spent the next year educating people, specifically those who said, I will never bid on an internet auction. I will never bid on the computer. And now I can't get them to come back to a live sale. So, but we spent an entire year basically teaching these guys and coaching them how to log in, how to be confident, how to trust the system that you're bidding on. And if there was an issue, to call us. You know, we removed a lot of bids. There was, thousands of times I'd get a phone call and say, I meant to bid 25,000. I put a $25 million bid on, and I would just tell them, I think you're going to get it. So nobody was going to outbid them. But anyway, we had a lot of those mistakes. It was a big learning curve. Now we're post-COVID, and there is a lot of comfortability. The majority of a lot of, transactions are now happening on the internet. We saw a massive increase. 2020 stat, don't consider that. Obviously, the majority of our sales went back to an online only. These stats are strictly for our live auctions. It does not incorporate any data from our online only sales. But what happened here was, what you could see is 40, 50, and then in 2024, 68%. 68% of our total bids through the live process came through the multiple internet websites that we use. So upwards of, more often than not, we use two websites, 2 different platforms, sometimes 3. So we've got 68% of our total bids came in from the internet, and 51.6% came in from the internet as well. That's 51% of the total net value sold at an auction sale. Now, with that in mind, the only point I want to make about that is it's a fantastic thing to incorporate that. We want to be able to leverage that. I know a few of you guys bid on our online sales, because you can bid on a sale in Fergus Falls when you're in Devils Lake or somewhere else. And it's nice to have that opportunity. I want you to come look at the equipment, number one, because representations are only as good as the guys taking pictures. We want to make sure that you're comfortable with what you're buying. But number two, the other point that I want to make on here is 50% of the bids are still coming from the seats. We don't want to lose that. 50% is still coming from the active value of actually having a live audience at the auction set. The last sale we had, I sent the stats out, Jim, was 1,800 bidders. We had 1,800 total bidders actively bidding on 97 items in Minnesota here at the end of the year. And that specific sale, 60% of the value was sold to bidders in the seats. So just want to kind of make that point that we still do not believe that the online only method is the only way to do it.
When you're online bidding, you set a maximum and it bids 4 or 5 times to get there.
Yeah.
You count each one of those incremental increases, that's an
No.
online bidding.
No, so that's where, these numbers are based on from the day the live auction starts. I had asked that question the other day when I was gathering, so, yeah. But that's a very good question. So no, from the day the live auction starts, so if we got call it $100,000 tractor that's for sale, and there's been bidding for a week, we generally allow bidding to happen over the website for a week. If there's been bidding for a week, if it starts at 35 to 40,000, that's where this ticker starts. So, yep, from that point on is where the bids are at. Okay. Just kind of some results of a couple of the last previous sales. One of the highlights this year was the DB66 22-inch 2012 22-inch corn planter. That was not in 2012. Was it 2019, right? 2019. So 2019 John Deere DB66 is only as good as the people putting the slides together. That was me, so I can't even blame anybody else. All right, equipment market trends. These are stats and data from multiple data points, but these are all horsepowers of tractors. And the main things that I wanted to kind of put together here, I might have to look at it a little closer. So inventory trend as compared to auction value trend and based on inventory. So all tractors in general, we saw a massive inventory reduction from 2020 to 2022. That's what was a big driving point of inflation, right? There was a lot of demand. There was very little inventory on the markets. And that's where we saw a massive increase in value. And that market has continued to maintain. Equipment values have come off a little bit. Now, the big question is, are equipment values tanking? Right? Who feels like there's a massive hit on value of equipment right now? Is that true? Is there a massive hit on the value of equipment? It wasn't normal to sell or to buy a 7230 John Deere tractor in 2018. It was not normal to buy that tractor for $100,000, use it for 3 years, put 400 or 500 hours on it, and sell it for 160. Right? That was not normal. Equipment does not gain value normally. What should it have done? In general purposes, it should have cost about $50 to $75 an hour at that time. Should have generally cost that per hour to run that piece of equipment. Over the course, you put 1,000 hours on it, it probably didn't depreciate by that much. But if you're going to buy a $100,000 tractor, if you're going to put 500 hours on it, it probably should have went down in value by 18 to 20,000. It didn't do that, right? We saw natural inflation carry the values up. That's where these things get skewed, where everybody looks and says, well, geez, now it went up and now it's coming back down. It's not coming back down necessarily, okay? My opinion of the values are everything that was manufactured pre-COVID. Take all the equipment that was manufactured pre-COVID, 2021 and before, 2020 and before. The value of that equipment naturally caught inflation, right? So if you bought a 2015 tractor for $150,000 in 2019 and wanted to sell it in 2023, you probably made money on that item. The cost of manufacturing went up a little bit, right? Not noticeably. Yeah, well, Quatracs is now only worth $1 million, right? So it didn't noticeably go up substantially. Manufacturing costs went up substantially, and that is going to continue to maintain the value of used equipment in the market. There's no question about it, because you can go buy a John Deere S790, a 2023, 2022, used one off the dealership lot for 600,000, 500,000. Not that much, right? Go buy 3 of them. What's your other option? You can go buy a 2019 or 2020 or 2021 for 250,000 in an auction sale. Still pretty good value for that piece of equipment, but in comparison, you're gonna pay double to go somewhere else and do it. That's what the change in the value is. I don't believe that we've seen a massive reduction in values, and we're not seeing this big crash in the market. The abnormal is now switching back to what should be normal depreciation. So if you're buying a piece of equipment, for all general intents and purposes, if you buy it for 150,000, it's gonna cost you $125 an hour to run that piece of equipment. Utilize that as your operational cost that you're gonna have to calculate, because now we have to calculate depreciation again in our operations where we didn't before. We weren't calculating depreciation mainly because we weren't seeing items depreciate. We had guys bringing items to an auction sale, and he said, "Well, what do you want for that tractor?" "Well, I give 150 for it 2 years ago. I'd like to get 175 on it." Well, that's not happening. Okay, so we're kind of past that point. That's kind of my soapbox on what's happening with equipment values. I don't believe that we can blanket statement across the board that we're seeing this tank market. We're just seeing it normalizing. We're really just getting it back to normal where we're actually, it costs us to operate. It costs us to run a piece of equipment. It costs us to run that combine. Now, how you want to calculate what you want to do with the dealership and buy a brand new item or go buy a new sprayer. Right now, a used sprayer, we priced one out the other day, it had $700 or $800 on it, and they want $490,000 to trade. And that's a lot of money. You know, for small operations like we have, that was a lot of money. We're not doing it. You know, I think there's gonna be some other opportunities out there. I don't know how many people are in the market for a $500,000 secondhand piece of equipment. I don't know how many people are in that market. They're certainly not showing up at the auction sales. Very few items are breaking that $500,000. And there's a lot of X9 combines that have been on the market with $100 or $200 on them. You would think that if anything was gonna maintain their value, it should have been those. And they're certainly not. So the high horsepower tractors, I'm not sure if I put it, yeah, I did. So the high horsepower tractors, what we've seen here is the inventory has rebounded dramatically. So in 2022, where you could not find a 4-wheel drive tractor, the hottest tractor on the market was the John Deere 9630, because you could not find a quad track, you could not find a 4-wheel drive tractor within reason. And so we saw those auction values and asking price values go up. That inventory has gone up dramatically to 300 horsepower plus, and now so that market is starting to come off a little bit from what was at peak levels. But they got a little overpriced too for a while. Combines, regardless of what this stat says, right here, what they're reporting that the inventory is coming up a little bit, but the inventory, I believe, is up dramatically on the equipment, on the combines. But what's really high is the comparison of the less than 5-year-old combines that are on the market. That number is huge. So the inventory, if there's 10,000 total combines for sale, like 62% of them are less than 5 years old. That's what's the big impact on the market right now. And heavy equipment, those are big swings. You know, so anybody here with yellow, and they're going to try to tell me to wrap this up. I think I got a little long-winded here today. So, semi market, the semis is something that was definitely worth watching here. There's everybody's always in the market for a good truck. We watched semis in 2020, 21, 22. We couldn't give them away for 13, 14,000. We had a scenario where one lady had brought the same truck to 3 different sales, no sale them twice. She wanted 18,000. We got 16. She wouldn't take it. Finally brought it to another sale. We got her 61,000 for the same truck. So she was pretty happy. Generally, I would say do not bring an item back that you know sold prior to. I'm not a fan of going to an auction or re-auctioning even land. If it no sale at one time, I won't take it on. So unless something dramatically happens. But the semi market has been having these huge up and down swings. At the end of 2024, which 2024 is a massive depreciation in truck market, at the end of 2024, we started to watch that rebound a little bit, specifically if they had quality. So, any questions?
If we'll add no sales, the seller still have to pay.
I guess that would depend on the company and the contract. I haven't really charged up for no sale. Advertising, we will charge advertising. as a general rule of thumb, when we do 200 to 225 land auctions a year, and I won't say none of them, but it's less than 1%, less than 2% that ever have the debate of whether or not they're gonna accept the bids or not. So if they haven't, they've been, generally sellers' expectations or maybe poor coaching on my part. If I set the expectations too high or are unrealistic, if you come to an auction sale for land, and, in this part of the world, it's probably not a good example. Come to an auction sale in Bowman, right? You saw the numbers, really good crop, that's gonna bring 332, 3,300. Generally speaking, we're gonna sell a lot of land in that 2,000, 2,400 range. If you come and you say, I want $4,000 for this land, and I agree to take it to an auction, whose fault is it? So that's, if there's anything that drives a no sale, it would be misjudging the market, by either the buyer, or either the seller, or the representative. So,
What if you have a high bidder on land and finance?
well, that's why we keep 10%. So the date of the auction sale, when you put 10% down, that's where the security from that is from. Generally, the value of that property will not be devalued by 10% by the time we sell it to either the contending bidder or another third party, if in fact the seller still wants to
So
sell
not
it.
what you would do is go to the second high bidder then?
I would attempt to.
Sure.
Yep, I would certainly attempt to. So then you always have that second high bidder says, well, shoot, he was the one who got bidding against me for the last 7 licks. I'm not gonna, I'm not gonna.
That's kind of what I'm getting.
Yeah.
Also, high bid because person you know money.
Potentially, it depends on the bidding circumstances. At least with the online bidding, we have a lot of record now. So I had a high bidder on a tractor back out. It was a $240,000 tractor, just happened here at the end of the year. We had 4 bidders all the way to the end, and I showed the contending bidder the bidding deal. I said, we can open it back up to between the 3 of you if you want to. You're the high bidder after, prior to him. We just allowed him to keep it for his number, and then if there was a loss to the seller, we took that. Just to make sure that our seller still received the same amount of money they were promised at the seller. So, not everything's perfect, but sometimes you gotta be a problem solver. A lot of times you gotta be a problem solver. We've worked with way too many people not having any issues. That's part of the thing about the internet that is driving me nuts right now. Probably the biggest factor why I refuse to become a wholeheartedly and 100% online only auction company is I do not trust the online platforms. I don't trust the system. We're starting to see a lot of bidder fraud. I can tell you how much bidder fraud I've had on from the seats from live bidders. It's virtually zero. I won't say zero because it's probably never nothing, but it's virtually zero. And you can measure it in percentages now on the internet. You can't bet everybody. The last sale we had 1,800 people total registered between on-site and online buyers. You can't bet everybody. So, and the law doesn't really allow you to go after it. You can, but it's going to cost you $50,000 to $100,000 to do it. Generally, their total bill isn't that much. So, yeah.
If a investment group like BlackRock is in there, do you guys see that in the bids, or are they like concealed through an intermediary?
No, we generally know who's bidding. Sometimes if they enter late, as the auctioneer, it may not show up on my screen who it is. And I want that transparency for myself, number one, because if somebody's given us bids in the past. Land sales are a little different. We do bet our bidders on land sales. It's way too valuable, and we're only generally talking 15 or 20 registered bidders on the land sale side. We won't accept their registration form if they click to bid 10 minutes before the sale, unless they're somebody who's been on dozens of our sales or hundreds of our sales before.
Is somebody like BlackRock always in there? Like, since it's online, are they always there looking for the?
There are a number of bidders that are on every sale. Yeah. Regionally, right? They obviously wouldn't be involved in anything down in Bowman or the western side of the state, but regionally, there's always the same bidders on. So all of the land auctions are actually clerked out of our office in Bowman, and so we see who's on consistently to many of them, but
So it's mostly local, it's almost never national?
international.
Yeah, well, BlackRock's national.
Yeah, I mean, 80% of it's gonna be your active producers. Yeah, so there are certain areas where that's gonna be skewed a little bit, but on the average, it's 80% right now. So Any other questions about the auction process itself or equipment? I kind of breezed through the equipment side because I don't know if somebody's coming in after us for this room. I don't think they are. I think we've got until after lunch before this room needs to be occupied again, so we can stick around. Anybody have any other questions?
You had like a landowner has farmland for rent, you manage finding tenant.
Yes. Yep, 100%. Not always. Sometimes. So the question was, do we find tenants for our land management properties? Many properties come into play where they already have a tenant in place.
Yep.
If that's the case, we want to continue to manage that relationship because it's generally, it's pretty rare where a landlord says, here's my land portfolio, manage this property, I don't want him on there anymore.
Yeah.
You know, I'm not saying it never happens, but it's pretty rare that that would happen. Okay, so when that comes into play, obviously, we're not here to force anybody to get into a lease bidding situation if the seller doesn't want. If they want to.
I suspect there's time for. False confirmation.
Yeah.
What's going on?
There's a lot. Yep. That's probably half of the circumstances.
Is it?
So if you're interested in leasing more ground or leasing some land, just you really get put your name in at the interland called the way. Say, hey, I'm from this area, something comes up.
Yep.
I
believe so.
This is one of those.
This,
How are you guys?
I think the whole entire roundup, whether it
Oh,
was confrontation or any of the other.
Good question. I'm,
perfect. Thank you.
I'll stick around here for another 15, 20 minutes. Oh, sure. You have a lot of land. 2025, we got, I think there's 40 on the market already. So the first week of February, we'll start getting, how many, Christian, how many sales do you have tomorrow? 3. We got 3 land auctions tomorrow. Down by Harvey? Yeah. Okay, yep, yeah, there's a lot. The first couple weeks of February, Jim and I get people out anywhere from Minot all the way down to Bowman. But yeah, it's filling in pretty fast. We are not gonna see a downturn in quantity of sales, quantity of acres, and quantity of equipment in 2025. Good question. Thank you all. Please enjoy the rest of your guys' show. If you guys have any questions, Jim and Christian and I will stick around here for a little bit. So thank you all for coming.